What's going on, everybody? It's your boy Jonathan from the Rideshare panel. Checking in today on a very important topic. We're going to be looking at whether or not you should invest in Uber and Lyft going into their 2019 IPOs. We're going to look at the very important details regarding their financials, the overall stock market health, and the underlying business models, and whether or not the competition might be giving them some trouble after their IPOs in 2019. So make sure you stay tuned for the full video, and if you haven't yet already, subscribe down below to get the latest rideshare industry updates and side hustles that can make you more money. Lyft's net revenue increased from over $400 million in 2017 to over $900 million in 2018. That's a huge growth. But net losses have also been increasing, and they're up at 375 million losses in 2018. Now, proportionately, net losses to net revenue actually look pretty good. That means the gap is shrinking because net losses were a higher percentage of revenue in 2017 than they were in 2018, which is a good sign to potential investors. Uber posted a revenue of close to $3 billion in the third quarter of 2018, but they also posted an adjusted net loss of close to $1 billion. And another important number that a lot of investors like to look at is their gross bookings, which came in at over $12 billion, but is reportedly slowing a little bit. Currently, Uber has a valuation at $120 billion, which is over 6 times that of Lyft's $20 billion. Uber's also been aggressively expanding into the bike sharing and the scooter sharing markets, which could be promising to investors in the future. With Lyft hoping to IPO in early 2019, Uber has yet to disclose when its IPO will be in 2019, but they have said that they'd like to IPO in 2019. Now, with the government shutdown coming into play, both of these IPOs definitely got pushed back a little bit. But it is still very possible that we see both of these companies IPO in 2019. So the question is the stock market healthy enough for these companies to flourish on their IPOs in 2019? If you look at a chart of the Dow Jones all-time growth, you can see that the last 10 years have been an incredible bull run. But bull markets don't normally last this long, and they're expected to turn to a bear market at some point. Uber insiders have even said that the 2019 IPO date was a rush to get the company into its IPO before a bear market approached. So what you have when you start to get into a bear market is investors going away from stocks and entering into bonds. And there's less risk appetite for certain stocks. So even if a company is good, there might be less people investing, and the overall performance of the company could be less positive than it would be in a different market. Now let's think about the app boom that we've seen over the last few years. A lot of companies have pulled on tons of investors in this app craze, where you can get on-demand services like rideshare, food delivery, moving apps, really just about anything that you can think of. But are there any barriers to entry for new apps to come onto market? Well, in the past, it was very difficult to develop apps. But as this technology advances, it becomes easier and easier to develop, and there become lower and lower barriers to entry. The app boom looks a lot like the tech boom did in the early 2000s, when companies could just create a website, something like shopping.com, and all of a sudden draw a ton of attention and a ton of money. But at the end of the day, what did they really have as an underlying business? What we've seen from rideshare customers is that apps are interchangeable. They'll use Lyft or Uber based upon who has the cheaper rate. And for a new company to come in and develop an app, it really isn't that difficult anymore. Consider the Amazon Flex app for a minute. Now, if you've ever been a Flex driver, you'll notice that the app is very robust, and it's not exactly a great experience for Amazon Flex drivers. But Amazon knows that all of their blocks and all of their fulfillment that they need to be done through the app always gets picked up. So it doesn't really matter to them how nice and how snazzy their app looks, as long as everything's getting done. This is because there are a lot of barriers to entry in Amazon's business. They virtually own e-commerce and a lot of distribution across the United States. So to take this one step further and look at Amazon outside of just their app development for Amazon Flex, Amazon has drawn a lot of comparisons to Uber and Lyft in the way that they were very unprofitable for a very long time. But they eventually achieved that profitability. So the question is, how will these companies attain long-term profitability? Are they going to be able to do so simply by having an app where they share the ride-sharing experience? Or are we looking towards autonomous vehicles? And if autonomous vehicles are the answer, do Lyft and Uber have what it takes to compete with the likes of Google and Tesla in this kind of market? Google has been experimenting with autonomous vehicles for the last 10 years. And Elon Musk has said that Tesla plans to do the same thing. With Tesla, you'll be able to buy a self-driving Tesla car, and when you're not driving it, you'll have the option for that car to hop on the on-demand market and give self-driving rides while you're not using it. So will Uber be able to persuade drivers to buy their own self-driving vehicles? I don't know. A lot of drivers feel like they've been taken advantage of, and buying a car hasn't necessarily been the best investment for them when becoming a rideshare driver. So we'll see in 2019 whether or not these long-term goals for the companies actually impact the IPO, and whether the enthusiasm will be able to break through a slightly waning bull market. At the end of the day, it's up for you to decide. Are Lyft and Uber companies that you want to put your money into? Do you feel like they'd be good investments going forward? Let me know what you think. Leave your comments down below because I'd love to hear from you. And as always, if you haven't subscribed yet, make sure you do that down below as well.